Hey crypto fam, ever wonder how Canada taxes your Bitcoin, Ethereum, or even those cool NFTs? It can feel like a maze, right? Especially with the Canada Revenue Agency or CRA having its own unique rules. If you're a Canadian crypto holder, getting this wrong can lead to some serious headaches. In this video, we're going to break down Canada's crypto tax landscape for 2026. You'll learn why the CRA treats crypto as a commodity, how the mandatory adjusted cost-based method works, and the big changes to capital gains inclusion rates that kicked in 2024. Stick around, you don't want to miss this. Okay, so here's the deal with the CRA. They don't see crypto as money, or even as a traditional financial asset. Nope, for them, it's a commodity, just like gold or oil. This classification has been consistent for ages, even reinforced in their latest guidance. What does that mean for you? Well, every single time you do something with your crypto, whether you're selling it for Canadian dollars, trading your Ethereum for Solana, or even using Bitcoin to buy a coffee, the CRA views it as a barter transaction. You are essentially exchanging one commodity for another. And guess what? Each of those exchanges is a taxable event. You've got to figure out the fair market value of what you received in Canadian dollars at the time of the transaction. Wild, huh? Now, let's talk about calculating your gains and losses. Canada has a strict rule here. You must use the adjusted cost base, or ACB method. This isn't like some other countries where you can pick FIFO or LIFO. ACB is mandatory for everyone. So what is ACB? Is a weighted average. You take the total cost of all units of a specific crypto you own, and you divide that by the total number of units. This gives you a per unit average cost. Every single time you acquire more of that crypto, your ACB per unit gets recalculated. It's a bit like continuously averaging out your purchase price. Makes sense, right? Let's run through a quick example to make this crystal clear. Say in January, you buy one Bitcoin for 50,000 Canadian dollars. Then in March, you buy half a Bitcoin for 30,000 Canadian dollars. So far, you've spent $80,000 for 1.5 Bitcoin. Your ACB per unit would be 80,000 divided by 1.5, which is $53,333.33. Now, let's say in June, you sell half a Bitcoin for $35,000. Your proceeds are $35,000, but your cost based on your ACB is half of $53,333.33, which is $26,666.67. That leaves you with a capital gain of $8,333.33. After that sale, your remaining ACB for your one Bitcoin gets adjusted based on what's left. It's a bit of a moving target. This is a big one that often catches people off guard. Every single crypto-to-crypto trade is a taxable event. Seriously, if you swap your Ethereum for Solana, you're not just moving assets around. The CRA sees you as disposing of your Ethereum and acquiring Solana. You need to calculate the fair market value of that Solana in Canadian dollars at the exact moment of the trade. Then, you compare that value against the ACB of the Ethereum you just got rid of. Any difference? That's a capital gain or loss you need to report. This applies to all token swaps, those complex DeFi trades, and even cross-chain conversions. It's why tracking everything is so incredibly important. Alright, listen up, because this is a major change that came out of Canada's 2024 federal budget, impacting dispositions on or after June 25th, 2024. Previously, all capital gains, no matter how big, had a 50% inclusion rate. That meant only half of your gain was added to your taxable income. But now it's tiered for individuals. The first $250,000 of capital gains still get that 50% inclusion rate, so half is taxable. However, for any capital gains exceeding $250,000, the inclusion rate jumps to 66.67%. That means 2/3 of those higher gains are now added to your taxable income. For corporations and trusts, it's even simpler. It's 66.67% on all capital gains, with no threshold. This is a huge deal for high-volume crypto traders or anyone realizing substantial gains in a single year. Your effective tax rate on those larger amounts just went up significantly. Honestly, keeping track of every single crypto transaction, calculating ACB perfectly, and applying those new inclusion rates can be a nightmare. That's where tools like dTax come in. dTax automatically pulls in all your transactions from multiple exchanges and wallets, calculates your ACB for every asset, and applies the correct capital gains rules, even with the new tiered rates. It generates all the reports you need for the CRA and can even help you identify potential tax loss harvesting opportunities. It's built to simplify your crypto tax life. Check out getdtax.com. It's open source and free to start. So there you have it. Canada's crypto tax rules in a nutshell for 2026. Remember, the CRA sees crypto as a commodity. ACB is mandatory, and those new capital gains inclusion rates are crucial to understand. Getting your crypto taxes right is essential for peace of mind. If this video helped you out, please give it a like and subscribe for more crypto tax insights. Thanks for watching, and we'll see you in the next one.